Afternoon, everyone, and welcome to IAB Europe's Economic Trends Forum. We host these forums every 4 to 6 weeks, and it is presented by our Chief Economist, who you can also see, Dr. Daniel Knapp, and it's a way for us to give a deep dive into a different industry topic or channel format. Over the last few months, given the situation, we've been focusing on the pandemic, and Daniel has been sharing some financial forecasts into 2020 and beyond. For today's one, we're actually dedicating this to our AdEx Benchmark Study. So Daniel will be providing an update on some of the key digital trends from this and also from the previous presentations, the forecast there. So before I hand over to Daniel, we will have the presentation, I think will be about 20-30 minutes long. Daniel will probably tell me slightly longer.
Probably, yes.
Probably. And regular attendees of the forum will know that at the end we have a Q&A. So this is a live event. We will be recording this and we'll be sharing it afterwards. So anyone that joins now, you'll see at the bottom of your screen there is a Q&A box. So please insert any questions into that throughout the presentation, and then I'll be asking these to Daniel at the very end. So thank you very much. I'll hand over to Daniel.
Thank you very much, Helen, and a warm welcome from me as well. We are broadcasting today from the fringes of Europe, talking about European ad spend, from the island of Pantelleria between Sicily and Tunisia. So we're going to take a look from the south to everything that is north of this location. As Helen said, we're going to do two things. First, we're going to dive into our AdEx Benchmark ad spend study. This is the reference study for European digital ad spend that provides a like-for-like comparison between growth, size, and trends across 28 European markets. And then we'll dive into an update of the COVID-19 situation and the impact on 2020 and 2021 ad spend, in particular digital. Now, we are all interested in the future today. So why is a look back to 2019, which is the last year now we're releasing the ad spend study for, why is a look back in the rearview mirror so important? Well, the 2019 data really shows us some of the big trends that are going to continue and be amplified actually by the pandemic, which is what's happening to growth in video, social, what's happening in programmatic, what's happening in display and in search and so forth. So now with this data, we now have for the first time, the really solid and final basis from which we can make our 2020 projections and actually see how these trends are going to, or how trends we saw in 2019 are going to pan out in the long term. So without further ado, I'm going to get started, and yeah, please get your question ready. I already look forward to them. Our AdEx Benchmark report, well, this is a study we've done since 2006, so it provides now a wealth of historical data, a real reference library of digital ad spend in Europe. And the way we go about this data has slightly changed in recent years, but one thing is fundamental about this study. It is a study that is a meta-analysis of ad spend gathered from the local IABs. So in contrast to a conventional analyst report or industry market sizing, this report relies on data provided by the national IABs. This is important because the national IABs know much better than a centralized research association of what's going on in the national markets. They can go much deeper. We take that data, we harmonize it, we aggregate it, and we make it comparable, and we fill in the gaps to ensure that we have like-for-like comparisons. And this means that we have data that is rooted in local expertise, but harmonized and filled up with gaps, in particular when it comes to social and search and the companies that report but don't participate in surveys, to provide us with the most comprehensive view of digital ad spend in Europe that we can imagine. Now, over recent years, as you can see on this slide, we needed to add more analysis to the reported data. This is because some of the large platforms do not participate in surveys and do not provide national spend breakouts, mainly to regulatory and financial compliance reasons. So we needed to develop models, econometric models, and sophisticated research methods to understand and associate ad spend on large platforms with local spend. And this is becoming of growing importance in this study. Now, there are as many rates in which data is reported as there are countries, in a sense. Now, broadly, we have gross, net, and rate card. But the definitions of these three things vary dramatically across countries. So that's important. What data are we talking about here? This gross data. This is after discounts, after rebates from rate card, if applicable, but before any commissions are being deducted. So we call it gross, which is also the gross revenue in a sense that the publisher receives. So if we look at the programmatic world, we would count spend that goes into the SSP, but before the publisher pays the SSP, it's 10% or however much it may be. We have different currencies in Europe, and to provide a like-for-like comparison and to ensure that the growth rates that we use do not change historically, so that you can rely on the data, we use a constant exchange rate, which means it's a fixed 2015 euro to local exchange rate to ensure that we have this like-for-like comparisons. In the data I show you, everything refers to the 28 countries you'll see in the next slide, unless indicated otherwise. Now, we cover around 98% of European ad spend with the countries listed here. Important to note is that Europe isn't defined as the European Union, but it's a more encompassing concept, as you can see by looking at this map. Now, let's delve into the key markets. What's happening in Europe and how do markets actually differ? We can see overall, since inception of this study, we could see a massive increase, of course, in digital advertising, now to actually a staggering nearly 65 billion euros generated annually in digital advertising. That's, if you look at the GDP, that's doing as much as Luxembourg's GDP or Serbia's GDP or Ghana's GDP just generated through digital advertising. And since 2013, actually, the market has more than doubled. Every year on average, we see around 4 billion being added to the market. Notable is, in particular, in the current climate, that we have not seen a single year of ad spend decline, digital ad spend decline. And we had many reasons to fear this. The 2008-2009 recession did not overall trigger a decline in digital ad spend. And also, when we look at the Eurozone crisis of 2012, no decline in digital ad spend. So looking at the historical data, of course, that begs the question, what's going to happen in 2020? It's a very robust market. Now, if we look at the role of digital in the broader media mix, for the first time this year, across Europe, or Europe in aggregate, we can see that digital exceeds 50% of all media ad spend for the very first time. It's some markets where this was the case much earlier. For instance, Sweden, I believe, was the first market in 2012, followed by the UK and then a few other very digitally mature markets. But now we can say what happened in these early adopter markets now also applies to Europe wholesale. Now, if we look at the trajectory of digital ad spend versus traditional ad spend, we can actually see that since the last recession, the big last recession, since 2009, the only part of the overall media pie that has been growing, paid media, has been digital. The other category in aggregate, yes, there was some media that had been growing, TV, out of home, and so forth. But if you take everything else in aggregate, has been declining since the last recession. If we take this long-term view, we can actually see what I said earlier in my comments about the COVID impact, that latent and slow trends are going to become exponential and amplified. This is again something we'll see post-2019, that the role of digital will accelerate and that certain formats within digital will become much more prominent. What we've seen in Europe over the past couple of years is continuous double-digit growth. This is remarkable in the sense that the market, of course, has been maturing a lot, now being more than 50% of all media ad spend. But the growth rate has not been slowing down as you would normally expect if something matures, but the growth rate has been fairly constant. We only saw a 2.4 percentage point variation actually in growth between 2012 and 2019. And if you look at the right side, if you look at all these years from 2012 onwards, you can see that 2019 actually is bang in the middle, and it's not really the worst year, although the market has been maturing. There are a couple of factors behind this. Number one, we have different dynamics in European markets, with some of the emerging markets growing rapidly. And digital isn't a fixed thing. The composition of digital advertising has been changing a lot. We've seen the rise of social, we've seen the influx of branding budgets of video, we've seen new transaction mechanisms such as programmatic. And these things all have meant that inherent innovations in digital meant that growth was going to continue. Coming from two buckets, if you will. Number one, migration from other media, where usually you see for every euro spent on traditional media, there's like a digital rebate, if you will, where around 80 to 85 cents of that go into digital if they migrate. Not everything is moving over. But then fundamentally, new companies that have never advertised in paid media before, companies that have never been in above the line advertising, now coming into media for the first time and opting for digital channels. So there's actually an expanding pie of companies that is spending on paid for advertising, which is fueling the growth of digital as well. Now, if we take a long-term view of which markets have seen in the last couple of years the biggest growth in a harmonized way. If we look at a multiplier, so by what multiplier did the local market grow in 2016 and 2019, we see that it's predominantly coming from these emerging markets, that meant these high growth markets. So Ukraine, Belarus, Serbia, Russia, Czech Republic, Croatia, Turkey, and so forth. These have been the main engines of growth. But remarkably, you see that one of the largest, most mature markets, the UK, also trails above the average with a 1.52 multiplier. And this is a perfect example of what I just mentioned a few sentences earlier, that innovative markets with programmatic, rise of video and so forth also contribute to this overall growth of the industry. Now, if we look at the 28 markets, they have a very different contribution to overall European ad spend. So we can see really the top 10 markets concentrate over 85% of the spend. The UK stands out, followed by Germany, France, Russia, and Italy, and then really the rest follows. So a strong concentration. The markets are certainly not created equal, but the smaller markets are growing much stronger. So we see this top 10 market concentration going down slightly, percentage point after percentage point year over year. Now, if we zoom in, we can really see this, not only the difference in sizes between markets, which you see on the left side, but if you zoom in, you can actually see that what looks kind of nearly identical or in the long tail, if you will, actually exhibits quite different levels of market size and market maturity. Similar to the multiplier, we can also see that in 2019, the CEE markets were the ones that led the growth. So out of the 10 out of the 14 markets above the European average growth rate came from Central and Eastern Europe. And this is across all formats, from display, search to classifieds and directories. Now, this is a wonderful chart that really shows us how markets are being positioned. What you see here, this is last year, 2018 data. You see the size of the bubble is the size of the market. You see on the x-axis digital ad spend per capita, a measure of the maturity of the market, so how much is being spent on digital advertising per head. And then the dynamism, the vibrancy of the sector, you see on the y-axis the ad growth. And you could see a fairly scattered picture in 2018 with some clear outliers like the UK and the Nordics and the smaller high growth emerging markets, for instance, in the upper left. What happened in 2019 is really an amplification of this, where we see a much tighter grouping. The UK on the right side is a runaway market, break out a category in its own. We see a clear cluster of the Nordic markets, and then if you look at the others, we can see one cluster of of not yet mature markets, developing markets, where most of them are growing above the average, but some have some structural issues. And then you see a very tight cluster of fairly large European media markets that are growing just within or just above the European average, some even below, like Germany. And actually, if we look at the development potential of European digital advertising, it's those markets here in this second cluster that are going to be key for the overall industry to grow. Because we see Germany, France, Italy, Spain, compared to what's being spent on other media in these markets, digital is still underrepresented. And the digital growth isn't where it should be. So these markets need to move in the next couple of years above the European average lines for the market overall to really continue to grow. You can see how quickly, for instance, a market like Russia are catching up, and in 2 years will, at current growth rates, if growth rates are maintained, will outperform France and be on par with Germany. From the markets, let's dive into the different formats. So we overall group things into three. We have display, which is an umbrella category where lots of things are in there. This is banner, this is video, this is affiliate, this is rich media. We take this as a container category, but we will provide in the study additional, more granular breakouts. And we've paid for search, and we've classified and directories. And we use these three formats just to ensure that we have the historical comparison back to 2006, while ensuring that we have additional granularity as it becomes more important. So we could see that in 2018, something remarkable happened where the dominance of search in the overall digital ad market in Europe was being displaced by display for the very first time. And in 2019, display continued to advance its lead, driving its growth predominantly due to video, programmatic, and social. We can also see that we are now finally, after probably nearly 1.5 decades of speaking about mobile, we are now can measure for the first time some of the ad spend in mobile first markets, both in desktop, so both in display and in search, we can see mobile as a higher share than desktop for the very first time in 2019. The real data here, I must add, might be a bit higher. We do have some lack of sharpness in measurement, as not all markets can break out with absolute detail and confidence. For instance, social revenues between desktop and mobile, and some count them predominantly as desktop. So the real figure of mobile is likely to be even higher than what we can see here, but it's a good indicator of the trend we're seeing in mobile. Looking into display by country, we can see, similar to what we could see in the overall digital ad spend, a huge discrepancy between the leaders and then the mid and the long tail. Now, the gap between the UK and Germany is not as large as, for instance, in search, because Germany has a very strong display market. France ramping up quickly as well. And we now have around 6 markets that are over 1 billion. Notably, you can see that after Spain, there's really a falling off the cliff, where there's around a 1 billion gap to the next largest market. We can also see that the exposure to display varies hugely between markets. So on average, display is around 45.9% of overall digital ad spend, but it really varies by market on how reliant the market is on display. And you can see in particular some of the Central and Eastern European markets are more reliant on display than their Western European counterparts. Look at display, we can see out of the 28 markets that we have, 21 are actually recording double-digit growth, and quite a number are above the European average. You can see it is driven by, again, CEE markets, but also we see Ireland and Finland and the UK amongst the top 10 markets. Now, if you look at classifieds, we see quite a different picture. So compare classifieds, just the visuals of this slide, with what we saw in display. So in display, we have a much more homogeneous growth. Yes, there are differences between markets, but they're not as stark, which means everywhere we have a fairly similar impact of programmatic, of video, and of social. Whereas in classifieds and directories, the situation is vastly different, which relates to two things. First, we see some markets starting pretty much from scratch when it comes to classifieds and directories. We see other markets that have, like the Nordic markets, had historically a very strong focus on directories and are now moving budget away, or have been for the last 10 years, from directories into search. So with a strong local directories culture here, directories are kind of bleeding out, if you will. And you can see that if you, for instance, look at the Nordic data from Norway and Finland, which are below the European average, or Denmark as well, Sweden even recording a decline. And we see massive consolidation in the sector, which is also fueling growth. So few companies now buying up automotive classifieds, job classifieds to consolidate things. The last thing is that classifieds and directories are changing themselves, where classifieds and directory sites are increasingly supplementing the insertion fees of classifieds and directories with banner display ads, which are often running programmatically. And that stuff is being counted for us in display. So this is why you see this different picture overall, which means lower growth overall and a huge discrepancy in growth across European markets. If we look for paid for search, the situation is fairly similar to what we saw in the display markets, where markets are fairly more bunched together. But you can see, whereas we see in mature markets like the UK, Germany, and so forth, we've seen search underperform display for quite a few years. Growth is slowing down, search is maturing. We can see that in emerging markets, there's still a massive potential for search, and we see above average growth. Now, clearly, glaringly here in this picture, we see Switzerland with a strong decline. This might be partly a measurement artifact from the local data collection. So I wouldn't read too much into this decline as a structural factor. Delving deeper into the display sector, we can see that the reliance on video increases. The share of the video share of the total pie has been growing, and it's the category that's really within display, helping advance the overall dominant position of display. And now, indeed, around 1/3 of display is video, and remarkably, we're not seeing a slowdown of growth. In fact, the growth is steady versus 2018. So now with 29%, last year it was 30.8%. So video is going to grow with continued high double digit, and our current forecast for the next 2 years is that it will still continue to grow double digit, 2020, 2019 combined, despite the COVID impact. So probably single digit in 2020, but double digit again in 2021. Within video, we saw a change in what contributes to the growth. The last 3 years have been dominated by the rise of outstream video, which in part also is in-feed video from social platforms. So here we provide a 3-year comparison, and you can see that from 2017, we could see a massive rise of outstream, which now is actually larger in value than the in-stream market. Now, that doesn't mean that in-stream is on the way out. On the contrary, after a slowdown in in-stream growth, the right side of this chart, we see a re-acceleration. So outstream growth, while continuing to be strong, is slowing down slightly, whereas in-stream growth, where you fundamentally find the really juicy brand advertising budgets, that stuff is accelerating, which is a good indicator for the overall health. We talk about many things that are not healthy in the digital world right now, but it's a good indicator for one of the healthy aspects of digital advertising, that it does work for the large impact-heavy brand advertising, at least from a spend perspective. Delving to social, we see a similar picture to what we saw in Outstream. That is, social really massively gained share. So I think these pie charts really display quite vividly that social moved from an already strong position to a near dominant position in 2019. So social now is one category only with 47.5% share of display. The 52.5%, it's lots of other stuff: affiliate, banner, rich media, open RTB, programmatic, and so forth in there. So very strong position for social. Indeed, for the first time in this study, we are providing a country breakout for social, something that we haven't done before. But we now have enough feedback from the local markets, and having trawled through SEC filings, have fine-tuned our model to provide some estimates. So this data, do take it with a little pinch of salt. It is estimates, but it is the most robust estimates that, in dialogue with IABs, with expert committees, by looking at SEC filings, CPMs, ad volumes, etc., we could come up with. This provides us with a wonderful view of how social is distributed across markets. That includes, of course, the large platform, but also local providers. For instance, Xing in Germany, the local LinkedIn competitor, and it includes VKontakte in Russia, the one of the dominant social networks there. Now, if we try to segment the market into details, this waterfall chart is helpful. So we can see, if we, in particular for understanding where growth is coming from in the display part. So if we strip away search and classifieds and directories, around, yes, 46% is display. About from that, a large chunk is social, and the non-social display is around 24%, which is a 15.6 billion market. This figure is important because when we look at in particular, the opportunity for programmatic is defined here as everything being transacted through the open RTB protocol, we can see this is the real addressable market. So not all of this is programmatic yet, but this is the size of the market in which programmatic, excluding social, currently operates. Despite the dominance of social, we see something similar to what we've seen about in-stream video, which means that after a period of really flat growth outside of social, we're now in the second year of a re-acceleration of digital display ad spend outside of social. So when we often speak about the dominance of social, this is evidence that there are pockets of growth outside closed ecosystems, outside closed platforms that are fueling the market. Other drivers in all of this, of course, remain video and mobile. So it's this triumvirate of social, mobile, and video that is underpinning display growth. But you can see, whereas we clearly can see that over the years, the social display that is going down, we see a very different trajectory within non-social display. And also, interestingly, when we look at the non-video display, it's not a linear displacement, video to other stuff, but there's also growth left in the non-video bit. Now, let's conclude on this study. So we could see that we now have the 10th consecutive year of double-digit growth in 2019. Well, we know it's going to end in 2020, but at least 10 is a round number, and it was a really strong period for digital advertising, and it puts us in a very good position for recovery post-COVID. Display continued to be the main growth driver, and while it's going to be impacted in 2020, we see it return in 2021. In video, outstream strong, but in-stream coming back. Social strong, but non-social coming back, and it's now a mobile-first market. So with this information in mind, we now have a robust basis to quantify what's happening in the future in 2020 and beyond. Last thing is we are constantly trying to improve the study. And we, for the first time, asked markets this year about connected TV spend and also about audio spend. But the connected TV numbers are still suffering from a lot of different local definitions and very, very hard to harmonize. We're now confident that next year we can fully include, and with a by-country breakout, audio data, digital audio data in the study. So not a part of the total of the 65 billion I showed you, but as a little side study, we could already see this is now the size of the digital audio market in Europe. We haven't included it yet because we can't break it out by country, but it gives you a flavor of what's to come in the future. And it's of course a market that is growing from a very low basis, but with high double-digit growth. Moving into the much anticipated outlook. So you all know that I provide a monthly update of forecasts relating to the COVID impact. Something remarkable or an important event happened just last month, which is the International Monetary Fund updated its GDP outlook. Our previous forecasts from April and May were reliant as a key variable on the IMF April GDP forecasts. So we know there's a strong correlation between GDP and ad spend. Now, the real GDP growth forecasts in June are a downward revision. So here you can see in pink, we see the key data that don't give us the data for every country, but for some countries, and here are the key countries that matter to us, the US as a comparison. So GDP is contracting in some markets on a double-digit rate, which is bad news for advertising. And here you see ranked by revision, how this revision impacted the markets. So no revisions to Poland and Turkey. In general, we see stable economic forecasts for the CEE markets. And then we see a consecutive revisions with Spain and France actually impacted the worst with the downward revisions. So here we see here the percentage point corrections. So France GDP is 5.3 percentage points, not percent, but percentage points worse than the April outlook, which is compensated by a higher, an improved rebound in 2021. So key question, of course, is, well, if only these four markets here, which have seen significant downward revisions in GDP, if these four markets make up nearly 53% of ad spend in Europe, what happens to our ad forecasts? So does the downward revision of GDP lead to a similar downward correction in our ad spend model? If that was the case, our ad spend correction would need to be severe. As you can see here, in terms of percentage points over how many percent is the June forecast worse than April, we could see, for instance, we would need to downgrade our ad forecast probably by around 1/3, which is pretty bad. Now, but is this really the case? Should we do that? We have very limited evidence to do that right now. We now see in the last couple of weeks and days, actually today, the IPA Q2 2020 bellwether for the UK came out. A lot of new economic data that suggests that Q2 was really a terrible quarter for advertising, probably the worst in the recorded history of many of the financial indicators that we're using. But in a sense, this is not news. It confirms what we already knew. We knew already that April and May were going to be tough and tougher than March. So what we see here is the forecast and the expectations of marketers that Q2 is going to be bad were correct. It does not mean that, although the data comes out now, it does not mean that Q3 or Q4 will be worse than we thought. And most importantly, a worsening GDP outlook does not mean that we need to revise our marketing spend downwards. Because when marketers planned their budgets, they, number one, didn't know the exact GDP numbers. They were anticipating something bad. So even though there's now a correction of GDP growth, the ad budget cuts were already calculated in. And the second bit is that the media plans or the marketing budgets are now, for many large advertisers, essentially fixed throughout the year. So many things have been frozen entirely. Other things have been reduced significantly. So we do not see massive changes now, in particular to brand budgets. Maybe it affects, as I showed in one of the next slides, how performance budgets peak and go down again. But we do not see, and that's the good news, despite a worsening of GDP forecasts, we do not see a worsening of ad forecasts wholesale. Now, there are still many uncertainty factors, in particular when it comes to the pace of the recovery and to 2021, but we see no reason to make a major wholesale revision right now. Now, what we need to anticipate, though, are two things. One is we are now in the phase where we move from phase 1 of the recession to phase 2 of the recession, or from the first recession to the second recession. So the supply recession, which was lockdown, I think, could be advertised, is being now replaced by a demand crisis. On the one hand, we see a rising unemployment rate, which means consumer spending is being squeezed, less goods are being bought, so less discretionary expenditure available. And also, if we look, for instance, at Kantar data about the consumer perception on economic impact, we can see that those that think the personal impact will be worse than anticipated is growing over time. The second bit to consider, in particular for digital advertising, is that we have so far not across Europe seen insolvencies, company insolvencies, business insolvencies related to COVID-19. In fact, if we look at the German data on the left here from credit reform, we saw that insolvencies in the first half of 2020 were down by 8.2%. It was actually shows that government stimulus of help packages and so worked. But economists agree that we're going to see a delayed impact of insolvencies moving into the second half of 2020 and also within 2021. So if we look at a recent study from CoFace, for instance, which looks at credit risk across countries, we see that between the end of 2019 and end of 2021, we're going to see often double-digit growth in insolvencies in many key markets. Some of these figures seem surprising, in particular if you look at the Netherlands with here high projected insolvencies, but the IMF forecast for GDP is very positive actually. This relates to differences in accounting standards where some insolvencies are registered later than they should be, and so forth. But it overall shows the key message is that we haven't yet seen a major fallout in businesses, in the pool of potential advertisers available. And that's one of the key risks beyond the consumer crisis, specifically for digital advertising, which is highly reliant on small and medium-sized businesses. So this is something that we need to brace for, and also as an industry, number one, lobby for subsidies and support for companies, and also provides an opportunity to, for instance, help companies with customized ad spend plans, with free media and so forth, to weather the crisis. What we also see, and this is just a schematic illustration because there's a lack of empirical data, but we're seeing, in contrast to what we perceived earlier, where we saw after the bottoming out in April and May, a gradual linear route to recovery, that in particular, we look at performance spend right now, we're going to see a very volatile market that's bubbling on for a long time. Where if we see localized outbreaks in some US states, a rise in infection rate in one European country or another, we see that performance marketers are reacting extremely quickly and postponing or freezing spend when infection numbers go back up again. So the German virologist, Professor Streeck, recently talked about, we do not have a second wave or a third wave, but we have a constant flaring up and then smoothing down of things again. And this is something that we will interestingly see in the marketing sector for quite a while until this whole pandemic is under control, which makes forecasting difficult. With it in mind, we have still added further detail to our forecast that I wanted to share with you today. So previously, we only had pan-European forecasts for digital and not by country. We have now, at least for the big five in Europe, and sort of total Europe, and we have a US forecast, which kind of shows how digital ad spend is affected. And there are two key messages I want to share with you on this slide. Number one is, in most markets, digital ad spend, in most mature markets, digital ad spend this year is going to be negative. So in contrast to previous recessions, we will not weather the storm entirely unharmed. But the good news is that if you look at the 2021 data, in all markets shown here, the 2020 rebound will be higher than the 2020 decline, which means that even with a more muted economic outlook for 2021, we can expect the digital market overall to return to pre-crisis levels. Two other things to share with you before we close for today. In the next presentation, we want to look beyond the numbers. We want to look in more detail at what structural changes is actually this whole economic situation having on the overall market. And one thing that we started to study is how marketing silos are going to change, how programmatic setups are going to change. So one of the most widely shared charts in recent weeks on Twitter was this move from gradual to sudden change when the e-commerce penetration in the US surged. We now see several other countries following a similar patterns. This means that suddenly sales online are becoming not gradually but exponentially more important. Good news for digital advertising. At the same time, that also means that digital advertising needs to be moved closer to the bottom line. It needs to move closer to business outcomes. So if we look at on the right side here, the overall pie of marketing dollars available globally, 1.7 trillion across advertising software, PR, data, and so forth. Advertising, paid media advertising, which I focused on in this study, is just about 1/3 of all of this. And there's a huge opportunity to actually integrate all of this paid media stuff with other marketing silos. And that's going to be one of the, I think, key drivers for growth, companies that succeed in bringing these puzzle pieces together. The second bit is, yes, we're going to see, and we're going to study this in more detail at IAB Europe, change in consumption. And one of the prized questions is, and how far do accelerated changes in consumption amplify certain media channels, like connected TV, for instance? One of the early things we can see is that there's a huge difference between what people say they're doing and what they're actually doing. Now, while China data and UK, US data isn't exactly comparable, it's still an interesting indicator. And we will launch some more systematic studies looking at this, where we want to understand what are people actually saying they're doing and how is their consumption actually changing. So the new normal of consumption, of media consumption, is not going to be that excessive 24/7 binging and moving to live content that we saw during the lockdown, but it will be probably a more muted version of that. And the key question for marketing now is, how can I quantify the marketing impact on that? And how can I develop strategies to actually capitalize on this new opportunity, these new eyeballs, this new time, but do it in a sustainable and in a safe manner. And with that, I want to close for today. Thank you very much for your attention, and look forward to your questions. Thank you.
Thank you very, very much, Daniel. Okay, so I have a whole host of questions for you. I think let's break them into the two different ones. So let's start with AdEx first of all, and then we'll move on to your forecast. So the first one is just looking at the growth rate for the CE markets. And this person's put, what can developing markets learn from this region?
What can developing markets learn from?
From the CE markets. Is there anything they're doing, that is causing such high growth?
Right. Okay. So of course, many of the CE markets are developing markets, but you could think of, so presumably the question is, for what we can see in the CE, can that be a template for other developing markets, for instance, outside of Europe? Now, I think yes and no. One thing that has been a benefit is a second mover advantage, where when it comes, for instance, to standards of measurement, programmatic infrastructures. A lot of the things that needed to be ironed out and built have been developed in the more mature markets and can now be exported. So there's a second mover advantage where debates and discussions don't take as long, also when it comes to effectiveness discussions and so forth. However, we have to see that the CEE markets also are structurally very particular, which means they were markets when the Iron Curtain fell, you had a essentially non-existent TV ad market, which ramped up extremely quickly as the commercial broadcasters proliferated. But you never had, on the other hand, this, you never had a big pie of newspaper advertising, because content was so censored that the newspaper industry, when it was finally liberalized, was already facing structural challenges. So there was less budget available to migrate from newspapers and print overall into digital. So that's something that's specific to the region that cannot be easily exported. So I'd say standards, measurement, infrastructure, yes, but we always need to look at the local market specifics as well in terms of media mix, regulation, and so forth.
Brilliant. Okay, this one is looking at the UK. So obviously they measure as the largest level of spend. And this is asking, so does this data include or cover spend running centrally in the UK, or is it including those campaigns that have been booked in the UK that may also cover the pan-European campaigns?
It's not covering pan-European campaigns. So okay. We've removed any international ad spend to avoid double counting.
Brilliant. Okay, that's great. So what are your predictions for mobile growth? Will it continue? And do you see Apple's recent announcements having any impact on future growth potential or investment opportunities?
That's good. That's a very tricky question. And I wish I had a clear answer. I think we're all struggling with the redefinition of the measurement of the attribution landscape. And one thing is, I think, clear that trying to fix and to put the status quo on live machines isn't going to work. On live support machines isn't going to work. We need to think about a completely new paradigm how digital advertising can work. And the Google announcement, the Apple announcement, they of course blows to the industry, but at the same time, they provide tremendous and creative potential to rethink the industry, to rewire the industry, and to also put it on a more ethical footing with consumers, which I think long-term would benefit us from less regulatory scrutiny. So I think the Apple announcement was interesting because it coincided also with debates in Apple. It was announced, but also debates in the industry now about being data conscious, using less data. And I think beyond, of course, ID solutions and things that we're seeing right now, this is also an interesting area that we need to think about. I haven't done yet any kind of impact model on Apple's announcement as the, I'm still getting my head around the exact ramifications, what it means, etc. But that's a great suggestion for us to look at in one of the future webinars, I think. Mobile growth overall, I think what this is doing right now is leading to, at least short term, a further concentration of mobile growth on just very few players.
Yeah. So following on, very similar question here. So again, social, we can see that it accounts for nearly 50% of display. Do you see this increasing over the next couple of years? In light of some of the recent brand boycotts, do you think this will impact social spend in the longer term, I'm presuming?
Now, with the recent Stop Hate for Profit campaign and other initiatives, we now have over 1,000 advertisers that, for instance, are not on Facebook anymore. I think WARC published a great piece a couple of weeks ago that showed that despite the high-profile names, it actually is just a very small contribution to Facebook total revenue. Many of the D2C brands and SMEs that have been fueling digital growth in the past are not taking part of this, and they have, in particular those who are direct, they have no other opportunities than to rely on the self-serve tools that some of the large platforms provide, which come under scrutiny. So I don't want to be pessimistic or optimistic, depending on which side you stand. But I do not see a long-term material revenue impact for the platforms from the campaigns we see recently. Now, I think it's too early to say how short-term this is and what the long-term ramifications will be. Overall, we're seeing a changed climate in advertising, which looks more at sustainability, ethics, fair trade, if you will. But as typical for this industry, the amount of talk vastly exceeds the amount and the quality of action. So I think this remains to be seen. One thing that is important for the industry is to provide, where I see a huge chance for programmatic if they do it right now, provide alternative channels and alternative infrastructures where other brand goals can be achieved, where you have different ways of bringing your own data, of scrutinizing metrics and so forth. So this I think will become more important. And the social growth we're seeing, I mean, search is a good example. Search seemed unstoppable many years ago. It's still growing. It's a very healthy business, but it's a single-digit business. Search growth will mature in the next 5 years. It will go likely to a single-digit growth, and we have to see that. Saying the future of social is, of course, heavily reliant not only on the existing platforms that we know today, but also on venture capital and on the ability for companies to acquire new trends. I think acquisition of Instagram was interesting. What's happening with Snap? Can it scale? But one of the things in social that's really interesting is how it becomes enmeshed now into geopolitics. If you look, for instance, at in potential TikTok ban in the US, so many different variables. One thing that's sure, overall social spend will go down. There will be new social platforms in 5 years that we can't even think about, and there's going to be higher regulatory scrutiny on platforms that exist today, and the whole category is being included into bigger geopolitical considerations, which makes forecasting difficult, but an exciting space to monitor.
Perfectly put, Daniel. Okay, so let's move on to some of your forecasts. Actually, this one's quite a good question. So after seeing the way the US is handling the pandemic, their words, not very well, why have you put that they have the strongest growth rates for 2020 and 2021? That seemed to be the only market that actually has high growth rates. So maybe goes against some of the earlier statements you made in our COVID special economic trends forums. Exactly,
yes. So overall, if we look at overall ad spend in the US, it is severely impacted. But we have a specific situation in the US right now. I see several things. Number one, digital spend very much continues, in particular on social. If we look at the recent Google and Facebook announcements, we saw they're both companies heavily exposed to the US. We saw much better than expected results, and the US was performing better than the European markets. That was one factor in the forecasts. And the second is that the US is an extremely cyclical market where political ad spend is a massive thing. Now we have the elections coming, and that's going to be a tremendous driver, despite COVID, despite lockdown, despite the bad handling of the pandemic, for digital advertising. And even announcements to ban political advertising on certain platforms won't make a dent in this at all. Number one, political advertising takes many forms and uses different digital channels. Secondly, what will exactly be banned? It's probably going to be just a very small proportion of direct party spend or direct candidate spend. But there's a whole underbelly of political spend which is extremely hard to monitor, which is political-like, or it's like identity or ideology based, which is so ephemeral that content moderation algorithms or anything that you use can't do that, can't spot that, and block lists on specific advertisers can't achieve the same. So the US is quite special in that, where it seems illogical, despite the bad handling of the pandemic, digital goes on, but it's mainly due to the performance nature of social and the cyclical events with the elections.
Perfect. Okay. So just a question actually here from Poland. Why the forecast for Poland on the ground, like no % increase? Was Poland excluded from the forecasts?
So the 0% change referred to the IMF data. Which is actually good news for Poland. There was which means there was no downward revision in GDP outlook for Poland between April and June. We haven't modeled the Polish market yet in the exact same detail as the others, because we were focusing on the big five first with the detailed breakouts. But I did not see any reason. Poland already stood there better than other markets relatively. I didn't see any reason to change the Polish outlook. So we only changed outlook when there was a significantly better or significantly worse situation in a given market. And as I said earlier, the negative ad outlook already priced in a very bad economic outlook, and there was no need to revise based on the IMF figures.
Okay, great. And then just a quick question: have you got any information expectations regarding e-commerce ad spending?
I have no data on that at the moment. I think we need to really define what that is. For instance, is it forms or is it spending coming from e-commerce players? So we at IAB Europe want to delve deeper into sector-specific dynamics to see where pockets of growth and opportunities for the industry as well, so that we can formulate some recommendations, guidelines on how to find growth in this arid landscape. And I think that question is a great suggestion for us to include in our future research. So thanks for that.
Brilliant. Okay, and then just finally, could you sum up your predictions for 2021 in one sentence?
Not great, not terrible.
Perfect. Okay, thank you, Daniel. Fantastic presentation, and thank you for everyone that attended live today. We will be sharing the full presentation and this recording with you via email afterwards. Our press release is up on the website, as is this information, and stay tuned for our next Economic Trends Forum. We'll be having a break for the summer, but we'll be back in September. Thank you very much, everyone.
Thank you, everyone.
Bye-bye.
Bye-bye.